When you're self-employed, it's not a regular situation when you're jumping into homeownership. You can't just run down to HR and grab a pay stub or print one off online. You have extra steps and extra documents. But these things shouldn't keep you from thinking that you can meet your home ownership dreams. It's a little bit more complicated, but it is absolutely doable. One of the things that every new homeowner runs into that can feel a little daunting is employment verification. But you shouldn't be overwhelmed with it. It's something you can handle too, even if you're self-employed. It's just about having the right documents to prove that you can support the mortgage that you're applying for. The documents that you need to qualify for your mortgage are going to vary, especially when you're self-employed. But you don't have to figure all that out yourself. You've got a home loan expert that'll tell you exactly what you need. Here are some examples. A current statement of bond insurance, a letter from your CPA or your tax preparer, or something from your clients that indicates that you actually have a service you're performing. Purchasing a home is a huge financial responsibility, and I know that you want to be sure that you're able to take care of it and make those payments. And guess what? Your mortgage company wants to be sure of that too. So that means that you've got to go through a process called income documentation. They want to make sure you're actually making what you say you're making. You're going to have to bring some documents to prove that your income matches up with what you say. There's a simple thing that a lot of self-employed business owners do that can cause a real headache in the mortgage process. It's this thing called commingling. Now, commingling is when you're mixing your assets together, personal and business. You want to make sure that personal expenses like groceries stay personal and business expenses like salary stay business. One of my top recommendations is having 2 separate bank accounts. If you have those 2 things separate, then you won't even get into a commingling mess. Don't be overwhelmed by all of this process. It's something that you can do. Talk to your CPA. Keep track of your spending and your finances. If you do those things, you'll be ready for the mortgage process when the time comes.